Hi, I'm Scott Starrett with Starrett Wealth Management, a part of Canaccord Genuity Wealth Management. So today we're very fortunate to have an individual who you probably haven't seen us chat with before, and his name is David Vankka. So David is the lead portfolio manager on the ICM Crescendo Music Fund, which some of you may have heard us talk about, some of you may not have. If you haven't, here's a great introduction to the fund. If you have talked about it, or if you have heard us talk about it, we thought it would be good to just do a quick interview, 20 minutes or so, a quick interview with David. So David is, as I said, the lead portfolio manager on the fund. He's also the president and chief financial officer of ICM Invest or Asset Management. And David, you've been around for about 30 years in the investment side, predominantly co-finding Tristone Capital, served as co-head of and principal of Peters and Company, and was vice president of risk management at a firm called Gluskin Sheff out of Toronto. And David, I'm going to open it to you. Why would you get involved in music after that oil and gas and risk management background?
Well, thanks, Scott, and appreciate Stare Wealth today having me on. And yeah, it is a pivot of sorts for sure. And I think at the end of it, we've been investing in various asset categories for a long time. And one of the really attractive things about music was it was an emerging asset where there had been a number of pension plans who had owned it for some period of time, but there wasn't a lot of market transparency. And it was also an industry that was in the depths of despair 20 years ago and on a recovery with streaming. And I've always been passionate about music, but it was getting to the point where we could get some information on the asset itself and realize there was like great diversification benefits of this asset class. And that's why you would see pensions plans invested in the first place, where no matter what happens in the equity markets or the bond markets, or even in other alternative assets, I mean, people are listening to music and people are watching videos that have music in it and playing games that have music in it and everything in between. So this steady, I call it uncorrelated asset, was really driven by different factors than other parts of people's portfolios, and that became a really attractive buffer when we would see things like COVID start and the equity drawdowns and other parts of these market dislocations where people continue to listen to music and continues to grow. So that was part of it. I think the second thematic was this rise in streaming, which we all know was continuing to accelerate, and since the era of Napster and piracy in the music, where the industry at that time was in a really tough spot with a revenue model. Streaming model has changed everything, and as smartphones became widely adopted, bandwidth became wider and broader. It now became something where you could have a global model. You could discover new music at any age. You didn't stop buying CDs when you graduated from college. And all of a sudden, you had this bit of democratization of content that could go to everybody in the world. So the tailwinds in the streaming market themselves are pretty positive. And then, third things about it. I mean, this is a royalty strategy. So we effectively buy the IP or the rights to the IP for these songs. Every time a song gets played, there's a small amount that gets earned, and that flows up to us in a really, really simple sense. But what happens with that owning the royalty is once we acquire it, we don't have incremental capital costs, operating cost, really cost overruns, timing delays, those kind of things you might see on other assets or even operating businesses. And it's a really long life to these assets. So the copyrights last 70 years after the death of the last remaining band member in the case of a band. So a lot of these assets will be around for 150 years with these rights achieved to it. So trying to find that really long tail of something that was different in the marketplace and assets that were difficult enough to acquire that not everybody could do it was pretty attractive to our entry into it.
Good. Now, I don't want to insult you at all, but I'm guessing that, you aren't necessarily going to the music conference and meeting with I don't know, pick a name, Gordon Lightfoot or Dua Lipa, to kind of say, "Hey, tell me about your music. I'm thinking I might want to buy some of it for the fund." I mean, how do you, sitting in Calgary where you sit now, and with your more financial background, how do you get access, or how do you deal with those type of artists, or get seen, in the music community?
Sure. Deal origination is a really, really important part of our business. And when we started, that was probably my biggest worry, and our team's biggest worry is, would we be able to originate enough deal flow? And yeah, actually, I am at these music conferences quite a bit, but the named artists don't tend to go, but their teams tend to be there. So what I think happens is, it's a small, it's still a fairly small community of lawyers, business managers, and other people who also know each other and have dealt with each other over the years. So we've partnered. We worked with a number of entertainment, like pure music lawyers in the U.S., and business managers, and they tend to have their own artists that they represent, as well as represent acquirers of catalog, and then it becomes a little bit of a word of mouth. And once we start doing deals and transacting, and we think we're pretty transparent with our processes, we start to see more and more deal flow. And we haven't had a deal where we've walked away from after we've signed an LOI, other than if there's a due diligence concern. So we've closed on everything we've done, and that's given us a pretty decent reputation in that space. So a lot of the deal flow will come from the legal community or the business managers, and there are catalog brokers. But to your first point, we do have some direct outreach as well. And there is, one of the members of our team is in New York, and he's from the music space, and others that we work with, where we will go directly to artists, or their managers, and suggest it. And if an artist isn't thinking about it, it's going to be a long and unlikely process. But if we're in the room enough with people where they remember us when they are thinking about something, then they're kind of positioned to pick up the phone. And for us, I would say we do mid-market deals. So deals, from a few million up to 20 million in range. And what that means for us is, we're bigger than sort of small buyers, but we're not competing with the KKRs, Blackstones, PIMCOs, Apollos, these very large private credit complexes that are in the space. So for deals in that kind of size range, we like the valuations better, and people know that we're active in that space. So and then it's really just keeping the relationships, and keeping a good reputation, for being someone that's decent to transact with. So then they'll tell their friends, they'll tell their other clients that this has been a good experience, and make those recommendations to, as someone who's really trusted by the named artist. So that's a lot of it. So the network side of it is fairly important to us, for sure.
Right. Good. Now, there's been a lot of press recently, for example, Queen selling their catalog for estimated, 1.1 billion, Kiss recently at 300 million, and then some older ones, last few years, like Bruce Springsteen and Bob Dylan.
Yep.
How often are you buying it from? And obviously, like you said, you're more mid-market. So my guess is you weren't necessarily bidding on the Queen
We didn't bid on the
acquisition.
Queen
No,
catalog. No.
no, no. So how often is it the artist that's selling versus kind of some of their management team? Because my understanding is, we all think, oh well, an artist puts out a song, or an album, a catalog, and they have, or a group of albums, and they're able to put it to this out, and they have a bunch of different songs, some of which are really still really popular, some aren't. But the ownership of those particular songs aren't necessarily just the artist. It may be their manager, it may be their agent, it may be other associated parties. Can you just talk a little bit about who's actually doing the selling, and what might be motivating them to do the selling in your particular case?
Sure. I'll talk about the first part of who we would be buying off of first, and then I'll talk about the motivations second. So when a song is created, there's a few different pieces to it. Somebody or a group of people have written that song. They also might work with a publishing company who might own a piece of that song. and then someone records that song and makes an album. And when they record the song, sometimes it's the writers, sometimes it's totally different people or a combination of people. So you get to this spot where you've got the band, but there's also multiple members of the band. You have their manager. They've had a producer. And typically a sound engineer and other people along the way, who will all have part of this income stream, as well as the record label themselves. And the record label typically would have given them an advance, and so they may own a chunk of it, or they may own the copyrights, and the artist just gets named, just gets the money for those copyrights for some period of time. So it could be any combination of those things. And we've bought, you know, we did a hard rock catalog with Sleeping with Sirens, where there was a bunch of people in the band, multiple parties selling. We've done songs where we bought pieces off a particular songwriter or one person in the band, or we've done a few producer deals as well, which are great because that gives you the ability to get access to, in our case, Taylor Swift's early catalogs, and we wouldn't be able to get access to her masters directly. Clearly, now we're looking at another piece of some of that from the writing side. So what we want to do is, it has to be available in some way, shape, or form, and it may not be every piece of it. We've recently done a pretty significant deal that'll be announced, in a few months, hopefully, where we bought a very active artist earlier catalog, but now he's going off to do new things. So sometimes they might sell an album, they might sell all their works, or anything in between. So we look at all of those pieces, and then you sort of get into the motivation side. For these legacy artists who were doing it, there's an estate planning component to it as well. And there was some worry, less so now, but there was some worry before about capital gains rates going up in the US. So there was a number of these groups, pushing to try and get these sales done. But at the end of the day, if you're, Springsteen's not running out of money, I don't think. But if you're in a Springsteen camp or whatever, you might want to be able to have this sorted out before your estate comes in. For the more active artists who are in the middle of their career, let's say they're mid-level successful, but not through Springsteen's category, they might want to, similarly, they might want to diversify a little bit now. They might want to buy some real estate. They might want to call Starrett Wealth up and say, okay, I'm still doing the music thing. I'm going to work on I'm working on my next pieces, but take this and protect me from myself a little bit. And the other thing that happens is they might want to own more of their own rights in their next chunk. So they could create their own record label directly, or they may take a much smaller advance, or cut a different deal with a major record label where those deals are effectively loans. So they may own more of the piece of it and have more control over their future assets. So there's a few ways that works. When COVID happened, there was a lot of artists who weren't touring, and for them, that's the biggest part of their revenue in most cases. So as a result of that, their cash flows were getting hit relatively hard. So we saw quite a few artists who were looking maybe more actively at it when COVID hit than they did before. And I think now it's at a really steady cadence of people starting to think about it more in their long-term plans. And we are seeing, and we like the artists who've been out, 5, 6, 7 years, who are doing well and want to keep going into the next part of their careers. So they may want to monetize that, but still have a really active future ahead of them, which is different than the very iconic artists, obviously, of course, who are not producing too many new things.
Mhm.
So I think those are some of the reasons that they look at it. And listen, if Neil Young does it, it's acceptable for anybody to do. And the only catch you do find is it's, they sell these things once. It's like part of their family almost in a lot of cases. So there's quite different emotional attachments than maybe selling an office building. So it's important in most cases that, we care for the works in a manner that's consistent with what their values are. And we try and do that and not get in the way of them at all going forward.
Right. Okay, good. Now, one of the things, as I talk to people about this, one of the things they bring up um, is, okay, yeah, but this is all fine, but there's a lot of things happening out there. I mean, AI has become more and more prevalent. Um, you know, we can buy into the fact or discount it, but let's say we buy into the fact that, Elon Musk is going to be successful with Neuralink and that all we're going to have to do is think a thought and all of a sudden the song plays in our head or something.
Yep.
Um, and I'm sorry, Elon, I know you listen, but I
Your number
probably
one follower.
bastardized your whole thing. But I mean, is that a real risk, or is that something that, well, no, that's not what we're actually buying.
Yeah, what we're buying, we're buying the existing songs that are playing and already part of our life and our lexicon and our playlists and everything along the way. So the AI is going to be, it's going to be a headline topic for a while. Within the industry, the view is this is going to be a tool. It's going to be a tool to help collect royalties more efficiently. It's going to be a tool to help pay songwriters and artists quicker. It's going to be a tool to help creators perhaps finish that last little piece of what they're doing. But the headline stuff is definitely, will this be a replacement for music? And when we saw sort of the weekend Drake song come up, it was down very quick. People would listen to it once, but it's not something that I think anyone had any emotional connection to. So we're now in the spot where
And just so
where
people know, the Weekend Drake song was created by AI and it was put out there, and people thought, "Oh my God, this is an amazing collaboration," and it turned out that it was an AI kind of creation.
Yeah, exactly.
Yeah.
And there's a huge copyright problem that here going on now. So Universal, Sony, and Warner, which are the three biggest players in every part of the music business. Like I said, we just own the IP, but they have full operating business, signing artists, taking different risks and things like that. And everybody would know them in some capacity. But they're suing Suno and Udio, who are these two AI generative companies, and saying, listen, you these things sound a lot like the music that we have the copyrights for, and you haven't shown us how you train these AI models, and we never licensed all this other music for you to train your models on. So that's a problem, clearly. And the side of it is they can't do that without licensing that music. So I think we're going to see some music licensed at scale to AI companies. We don't know, but they'll be paying for it along the way, train their models. But I think generally, we don't see, and most of the industry doesn't see music itself going away by any means. So, but it's going to be in the headlines here for the next year or two or three, and there will find some rationale to use it. But we are excited about uh, increasing the pie, just given the back end of making sure you've collected all the royalties, or making sure the distributors have collected all the royalties. Where there has historically been some slippage, which gets narrowed over time. So I think there's tools like that that are going to help automate things as well. But if you believe that AI songs are going to replace all the music out there, that's not our thesis. Then you then that's one thing. But I think there's a long way to go. There's a lot of litigation, and I don't think it's ever going to stick like that by any means. So,
Yeah. Okay.
yeah.
I could talk to you forever. But just one kind of bigger question I wanted to just to clarify, or have you clarify, I should say, is, can you go through where you see the growth of the industry? I mean, I know that the fund is an income stream, right? Depending on how many listens, how many streams, listens, over the radio, whatever, even CD purchases, if you're still doing that, or vinyl purchases.
CDs are big in Japan still. Yeah,
Oh, okay, there you go.
yeah.
So, so we're getting revenue from that, or we're benefiting from it. That's great. So maybe talk a little bit about the growth, and then, talk about the risks. And I just want to people understand that, you know, if your returns are where they are, this isn't a risk-free asset by any stretch, but
Mhm.
the risks are very understandable and manageable. So maybe if talk about the growth, the kind of positive end and where you think things going realistically, of course, and where the risks are, and they may be risks that you don't think they're like AI, but what other risks would there be?
Sure. Let's talk about the growth first. So, streaming is still, the biggest part of the market by far, and has been growing. And it's bigger, it's larger in the U.S. than it is in other parts of the world, as an example. So we're starting to see there's a volume, there's a price and volume side to this now, and it was just a volume side until recently. But we're starting to see more streaming being adapted in other parts of both developed big markets as well as emerging markets. Spotify entering hundreds of countries, all that sort of thing definitely helps going on. And even the transition from, Japan listening to CDs onto streaming, that helps that growth go forward. So we're starting to see that happen. There's been a proliferation of other platforms, and there's going to be some that we haven't even been invented yet that are using music. And this runs everything from, video services like Disney Plus needing to license it to, you know, gaming where they have concerts with 20 million people watching online, avatar style concerts, to fitness apps, like Peloton, and then TikTok has obviously been the biggest, growth area in the market itself, and that's the number one music discovery source now versus Spotify. Less for our generation, but certainly the younger generation. So all these things are continuing to grow the pie, and there's going to be some that don't even exist now, and they all have to license music. And there was a historic pattern of these platforms being created, not really realizing they had to license the music, growing super fast, a lawsuit, and then settling, and then driving on, because there's pretty clear rules about these copyrights and what you need to do to use them. So that's another grow area. Certainly, smartphone adoption throughout the world continues to increase it, and the growth in music, just I'd say regional music being listened to in other parts of the world. So, I mean, you see K-pop over here in a big way. You've seen a lot of growth in Mexico regional music, and Latin as a category, tone has been the fastest growing category over the last 2 years, because people in other parts of the world are listening to a lot more Latin music. So those were things that wouldn't have happened in the pre-streaming era, and they're starting to grow pretty materially. So we're excited about that. The population continues to grow as well, and then there's the price side of this, where this directly impacts what the royalty holders have. And Spotify's raised their prices a couple times now for the first time in 12 years. And what that does is that increases the size of the pie that goes down. And because music, I imagine most of your clients would have one, maybe some would have two paid music subscription services. They might have 7 video subscription services. These are being treated like a consumer staple, in that nobody is canceling their family's Apple Music or Spotify subscription if they're in some tough economic times, or certainly it's one of the very last things. But they might take 3 of their video services, take it down from 7 to 2 or 3, because of that. And in terms of the value for money, if you think about what you get for a sub $20 subscription to music and getting access to pretty much everything in the entire planet, that's like a couple of lattes. So that pricing power is pretty significant in terms of the industry being able to grow, and we're starting to sort of see that with Spotify, just as being a beta perhaps for the industry going forward. So we think that that's going to continue and really continue to benefit. And I wouldn't be surprised if we're paying 3x in 5 years for our music subscriptions. I mean, there will be a level of saturation, but it's certainly, the trend is going higher. So all of those things are positive. The industry reports continue to point to growth for a number of those reasons. And yeah, so when you touch on some of the risks, there is a reliance on the industry on the basically the digital streaming providers, certainly the Apples and Amazons and Spotify's to distribute this music broadly. It's not to say Universal couldn't create their own and distribute it, but I mean this is pretty embedded in people's lives right now. And one of the things Spotify is doing now is they've snuck audiobooks into people's subscriptions without telling them, and they're trying to make an argument that the value of these audiobooks is quite high relative to what people are paying, and saying the value of the music is lower. So it's a somewhat nonsensical argument, but there is now litigation from every music publisher out there on this. So there's a little bit of those kind of things going on where you're still reliant on a regulatory environment. Like we have seen a trend with more money going to the songwriters in particular, and we think that's right. And that might mean less money is going to Amazon or Apple, but I don't think there's a real movement to get them more money in this case. In the case of Amazon and Apple, they're this is not a core part of their business. This is a loss leader to sell other things, the entire music space. Spotify is different, where it's the entire piece. So those are some of the things we got to be careful of and be on top of. We also try and own, when I say both sides of the copyright, the songwriting side, as well as the actual master sound recording side, because then if the pool of money swings a little bit from one to the other, we're not fully concentrated in one area. We have well over 20 catalogs in our portfolio. I think diversification within the portfolio is important. So if you just buy a catalog or two, you're at the risk of that particular artist or catalog being listened to less than what you expected, and then it will take you longer to get paid out. But you can diversify that somewhat by having different genres, different artists, different ages of catalog along the way. We don't invest in brand new artists or try and pick the next artist. That's more of a venture capital model, I would say, in the space. It's workable for sure, and you can certainly sign 10 or 20 artists and try and build them up, and a few will work out. But that's not what we do. We try and buy something that's demonstrated it's generating cash flow over time, where we think there's going to be some growth in those cash flows into the very, very long term. So some of the things to think about on the risk side, again, inflation is, we think there's a lot of pricing power here, and if anything, the pricing is going to exceed inflation. And then interest rates have zero effect on our cash flows, but if interest rates were to go up meaningfully, the value of selling the assets tomorrow might go down, and I think that applies to pretty much every asset class. But so far, we've seen multiples, I'd say, stabilize in the space, but certainly not drop materially. And now we seem to be into an easing cycle, which will benefit that. But yeah, those are some of the things to consider on the risk side. Like I said, there's no risk to it, but I think within a broader portfolio, where you look at an asset like this, it's got very different risks perhaps than your equity portfolio or your private credit portfolio, or your real estate or your regular fixed income, where it acts better in times of drawdowns in those other assets. So we think that's a really neat benefit of owning the music itself, and it's fun for clients to talk about with their families and kids. So
Yeah, no, exactly. Well, that's great. Well, like I said, maybe we'll have to do another one of these in a few months, because I have a bunch of other questions to ask you. One of which was going to be your third most listened to song, "Bye Bye Bye" by NSYNC, being the lead song in the Deadpool movie. I'm interested to know how many millions of dollars we all made from that. I'm just kidding. But yeah, let's leave it there for now.
that's
David,
great.
really thank you for joining me today. For anyone watching or listening, definitely, if you do have any questions about ICM Crescendo Music or about any of the other ideas that we have, please do reach out to any one of the Starrett Wealth Management team members. Other than that, we'll talk to you very soon.
Great. Thank you, Scott. Appreciate it. Have a great afternoon, and thanks everyone for listening.
Thanks.